Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update. Today, we started the day super choppy in this area. As you can see, quite a lot of weeks, and then we started selling off as continuation from yesterday. Big panic sell-off after FOMC raised the interest rate again 75 basis points. So today, it looked like continuation, but we had a couple of economic data coming up, so perhaps we could have a little bit of good news. So at 8:30, we got initial jobless claims and continuing jobless claims. Initial jobless claims was more or less as expected, a little bit lower. So bad news, we were expecting from 280,000 to 223,000. So we were expecting more jobless claims to confirm and to continue seeing the labor market, in this case unemployment, going higher. Continuing jobless claims, on the other hand, was higher than expected, so mixed sentiment regarding continuing jobless claims and individual jobless claims. So we opened the market, but at 9:45, we got another set of economic data. In this case, good news, composite PMI and services PMI, we got good news, lower data, lower numbers from 45 to 49, 48, and services from 49 to 47. So PMI continues showing a cooling economy, and that's good news. Actually, it was higher than expected, but lower than previous. At least we are going in the good direction. At 10 a.m., we got the final big number of the day. ISM non-manufacturing PMI came lower than expected at more or less lower than previous one, but more or less as expected and as forecasted. So mixed sentiment today, not big data, but at least we're seeing a decrease in services and non-manufacturing PMIs, but employment still hot. So let's analyze what happened in the morning, because when at 10 the PMI came out, we were trending up. We broke the 45 EMA and started trending higher. So the big, as usual in these reversals, the big key point to watch is the high of day. In this case, more or less, shorts were expecting this. So they added on high of day, we got the pullback, and then bulls started again of buying the dip, and we got the high of day, in this case, this consolidation in 10,000, almost 900. So why we stopped there, I think is part of the move, but look at this. They were already selling up here, creating a market structure for shorts to continue pushing the market down. So these are the things that you have to take into account. These market structures, these lower highs and this choppiness at high of day. For sure, we were bearish today, but maybe the PMI came better than expected and bulls were trying. As you can see, the shorts started again pushing, and we got a very big, strong sell-off, continuing with the double bottom in this range. So nice double bottom that you can see. You could have taken a long down here, and again they started trending. So super choppy down. News came out. The shorts started pushing again down, and now we are more or less trading sideways. In my opinion, we are still in the range. Low of day remains the low of the day, and this pivot remains high of the day. So we will see if this kind of weeks, as you can see right below at 10,700, this kind of support, if bulls, we can remove this one, if bulls take more opportunities down here, but right now is 50-50, super choppy day. And let's talk about the volume profile. You can see here, this is equilibrium volume profile. I think I've seen this a couple of times before, but this is super rare. That means that this yellow dot line, the point of control, the point in which most volume have been contacted, is in the middle of the range. So basically, today you can play both sides with Fibonacci levels to trade the range. Very big range, but this is a usual equilibrium volume profile that remains in range, and price action just goes in a range, trading sideways, and you can play short on the extremes and long in the bottoms. So that's for Nasdaq. S&P's a little bit stronger. You can see that it's trending up. It's not playing in a range. We were mentioning in the last couple of days that ES has been stronger than Nasdaq. So this is something to take into account. Big tech is very sensitive to high interest rates. So it's normally ES is stronger than Nasdaq, but this is something that you have to watch out if you want to play the Nasdaq. Wait until ES makes high of day, because it usually drags up, pushes the Nasdaq up also. What else? Let's talk about dollar. Dollar is right now 0.70 on the day. Quite a big day for dollar. If we check the 2 hour, it is still super strong, pushing this pivot. We had a little bit of pullback of news, but remains strong. I think it's pushing this pivot right here, up here. So let's change this. I think it's pushing the 114 level. So as long as dollar remains strong, I think overall market will suffer and will feel the shorts pushing down. Dollar is still an issue nowadays that we have to fix somehow. Yields, 2-year yields. Let's check the 5-minute. Since yesterday, still trending up sideways, and the 10-year is also sideways, holding the 4% level in the 10-year. Right now, 4.13, 13 points more than the yesterday FOMC decision. And 2-year is pushing the 4.5%, right now 4.7%. So super strong. The yield curve still inverted as hell, as you can see. We are pushing right now. We are still inverted, and we touched the lower extreme of the range. This is beautiful. And this is something that we have to also take into account. We need this inversion to finish. The 2 years still super strong, and we'll be in a recession until this comes up to zero. Finally, Treasury bonds still trending higher, right now in the red because the gap down from yesterday, but right now quite good trend, and this is good. Treasury bonds and high yield corporate bonds both are more or less holding sideways. They are not pushing lower lows, and the daily remain more or less in the range, the big range, super choppy. But be aware, remember, watch the dollar, the yields, and the treasury bonds, high yield corporates. Bonds market are an early warning sign of direction. If dollar inversely correlated with the market still strong, we will feel the pain. And as long as high yield corporate bonds and high yields are trending lower, we'll be seeing shorts and a lot of pressure to the downside in the overall market. So that's something you have to watch out in these uncertain times, because no one knows for sure what will happen after yesterday, and you have to watch the money flowing between cash and yields in the bond market. What else? XLY, XLP. XLY is quite weak, super weak. Is one of the things that I don't want to see, because until this XLY starts going higher again, we won't see a push in the overall market. So right now we are moving again back to the lows of the range, the lows seen May, and consumer discretionary is super slow, super weak. Just take a look at Amazon. Amazon today is super weak. So we got new lows before the FOMC and we are continuing selling off. Amazon consumer discretionary is super weak on the day. Apple also still selling off. And as long as these big tech companies continue to go lower, they will drag the overall market. And consumer discretionary is one of the sectors that you want to be holding and moving up for the overall market to maybe start pushing a little bit. Microsoft, new lows, super weak. Tesla is surprisingly strong. As you can see, it was pushing higher, but then this was the moment in which it broke the 45 EMA, and since then is showing quite a bit of weakness. It's the only one, apart from Nvidia, super strong, is the only one green. The rest, Amazon, Google, Meta, Microsoft, Apple, all are in the red as continuation from yesterday. So Nasdaq is playing the range, S&P is stronger, but more or less trending. I don't know if we are going to see a bigger move than this. It would be nice to recover this kind of previous support is now resistant in the S&Ps, and for the Nasdaq it's more or less also right here. Let's check this out. We got this support that I think is now resistance. We need this pivot to be taken to start. This is pre-market today, so we need this to be taken out, 11,000 reclaimed, before starting to think about maybe going low or going higher. But right now I think we are super bearish, and unfortunately I think we are going to test this early October low of the year. So we will see. Time will tell. We need time to digest all the news and start seeking again economic data. Regarding economic data, tomorrow is a big day. Don't forget about tomorrow. Tomorrow, Friday, non-farm payrolls and unemployment. If this comes good, comes better than expected, and we see lower payrolls and a little bit of cool down of the employment, that means higher, even though 0.1% unemployment rate, we will push higher. Feds were saying that housing, that we are already seeing that it's weakening, but labor market is super tight, super strong, and we need to see signs of weakness in the labor market. And that's key for the upcoming future and December interest rates hike. So that's all for my side. Thank you for your time. If you have any questions, as always, you can comment down below. If you found this video useful, please click the like button and subscribe to the channel to receive notifications. I upload new videos every single day for market forecast, market updates like this one, and market recaps. I appreciate your time and see you in a couple of hours with the market recap. Remember, the trading day is not over yet. So if you want to play the range, feel free to do so, but be careful. This is a big range and sideways consolidation after yesterday's sell-off, and most probably this kind of volume profile means short covering. So don't get too confident and be patient. Discipline and risk management are key for success. Stay safe, everyone, and see you later with the market recap.